Hello, and welcome to Gerson Lehrman Group's webcast on Chasing the U.S. Natural Gas Liquids Uplift, presented by GLG's Energy and Industrials Councils. My name is Jessica Shane, and I'll be your host. I will give the floor to our presenter, Peter Fusulo, in a moment, but first I want to cover a few quick items. The webcast should last approximately 45 minutes, 30 minutes for the presentation, followed by a 15-minute question and answer session. If you have a question, you can either enter it at any point during Peter's presentation, or you may send an email to webcasts@glgroup.com, and your question will be read, time permitting, at the end. If you would like a copy of the presentation, click on Download Slides for a PDF version. By way of introduction, Peter Fusulo founded Nvantage, an independent energy consulting and investment company. Previously, Mr. Fusulo was engaged on an exclusive consulting basis with PG&E Gas Transmission, where he focused on strategic transactions and integration issues. From 1997 to 1998, he was Vice President of Business Development and Strategic Planning of MAPCO Incorporated, reporting to the Office of the Chairman, where he played a key role in merging MAPCO into the Williams companies. From 1983 to 1997, Mr. Fusulo was Senior Vice President in Valero Energy Corporation, responsible for corporate development. I would also like to remind all participants that Peter may have limitations on what he may discuss and may decline to discuss certain topics that involve confidential matters. With that, I will now hand this over to Peter.
Thanks a lot, Jessica, and it's a pleasure to be here to talk about the NGL business. What I'd like to do today is go over the implications for supply and demand and pricing of U.S. NGLs and talk about chasing the NGL uplift. And what we'll do is, if we turn to the topics to be covered, Jessica gave you a brief description of our firm, Nvantage. We've been in business since 1999. It's my business partner and I. We do a lot of consultation and advisory work for independent producers, midstream companies, petrochemical companies and refining companies, and a lot of private equity and hedge funds also subscribe to our business. For our presentation today, I'd like to give you a little bit of introduction, and then we'll go over do a broad overview of the NGL business. Then we'll dive into NGL supply from gas processing. We'll look at the petrochemical business and its demand for ethane, and then we'll take a look at ethane balances, and then we'll wrap it up with a summary and review. Just to give you a little bit of an introduction is that what we've seen is very low natural gas prices relative to crude oil and very high NGL frac spreads, that is, the difference between NGL market prices and natural gas prices, are really causing natural gas producers to chase rich hydrocarbon gas plays to capture the NGL uplift. And as natural gas production increases from these plays, it will have an impact on NGL balances and midstream companies and end users that use these NGLs. NGL extraction is expected to increase following the surge of NGL production over the 2007 and 2009 period when U.S. gas processing capacity expanded by 10%. Several U.S. Gulf Coast NGL terminal operators are also chasing the NGL uplift, creating a potential new source of NGLs from processing high BTU or hot LNG, as they call it. Additional infrastructure is going to be needed to deliver the incremental NGLs to market, and that's going to resolve logistical bottlenecks that have occurred since the last build-out that we've seen over the past several years. One thing to note is that NGL markets can be highly variable and fragile at times, especially for ethane, which constitutes over 40% of the U.S. NGL barrel from natural gas processing. And the questions are, will NGL end-use markets, particularly the U.S. petrochemical market, be able to efficiently absorb these NGLs? And can producers count on these high NGL frac spreads to last? And which companies could benefit or adversely be affected by these additional NGLs? And when we look at the overview of the business, a couple of things to note is that the basic facts about NGLs are as follows. Natural gas liquids are not a single entity, but consists of really 5 distinct components. You have ethane, propane, normal and isobutane, and natural gasoline. And each NGL has its own set of fundamental drivers and pricing mechanisms, even though NGL components may compete for the same market or come from the same supply source. There are 2 major supply sources for NGLs: the processing of natural gas to extract a mix of NGLs that must then be fractionated into the individual NGL components, and as a byproduct of crude oil refining, the extraction or fractionation of those gas liquids from refinery off gases generated from various refining processes. NGLs have little, if any, influence on their markets, and they must compete with alternative feedstocks or fuels. Consequently, each NGL must seek a market or be priced competitively to be fully absorbed by those markets. And any analysis of NGLs as a single entity would be a gross generalization of the fundamentals that drive supply, demand, and pricing of individual NGLs, and could result in misleading conclusions about the outlook of any individual NGL. So therefore, we really have to look at, I'll introduce some of the concepts for the NGLs as a whole, but we really have to break them apart and look at the individual NGL components. And in this presentation, I'm really going to focus on ethane, and I'll explain why the focus will have to be on ethane going forward. If we look at the major U.S. NGL supply sources and end uses, basically the U.S. NGL market, and I just took a 5-year average going from, like, say, 2004 through 2009. The 5-year average is about 2.44 million barrels a day. So that's the size of our U.S. NGL market over the past 5 years. Gas processing has actually contributed about 73% of the total NGL supplied to the market. And when you look at the amount of NGLs that have come from gas processing, almost 40% of those NGLs was ethane, about 29% was propane, about 17% was your butanes, and then natural gasoline was about 15% of that NGL barrel that came from gas processing. As we noted before, crude oil refining is also a contributor of NGLs. A lot of it is on a seasonal basis, but the crude oil refining contributes about 16% of total U.S. NGL supplies, and most of that NGLs are propanes and mixed butanes that come off the refineries. There's a little bit of ethane that goes into the petrochemical industry. And another source of NGLs comes from imports. We get imports over land from Canada. We also get imports from ocean-going ships that come into various LPG terminals on the east and Gulf Coast. The majority of the imports that we get the composition is about 65% propane. We get 24% as mixed butanes and a little bit of natural gasoline, which we also call pentane plus. Again, the sources of these NGLs from these imports are usually where there's processing overseas or there's refining operations overseas where they have excess LPGs or NGLs and they come into the country here. The biggest end use, if we focus on end uses now, the biggest end use for NGLs is your primary petrochemicals. It consumes about 50% of all NGLs. Right now it's probably more like 55 or 60% of all NGLs if we had to tabulate it today. Virtually all ethane goes into making the primary petrochemicals, about 98%. About 40% of propanes are used to make primary petrochemicals such as ethylene and propylene. Normal butane constitutes about 28% of the petrochemical feedstock feed, and natural gasoline rounds out the last 29%. The other major market is space heating and other fuel uses. Basically, propane goes into this market. A little bit of ethane is blended into propane. The other major market for NGLs is motor gasoline and blend stocks. approximately 66% of all the normal butane that's supplied into the U.S. goes into the production of motor gasoline. Virtually about 100% of all isobutane goes into the production of motor gasoline, and about 61% of the natural gasoline. And then natural gasoline is also used to denature ethanol. It's a very small component now, but it's going to grow over time as ethanol supplies grow and the blending of ethanol continues to go up due to mandates. And also we export a certain amount of liquids primarily from the Gulf Coast to places like Latin America, and mostly your propanes and butanes go into those export markets. So that kind of gives you a really broad overview of the basic supply sources of NGLs and the basic end use. But the key point here is that really gas processing is your major supply source, and your major end use is really your petrochemical manufacturing of ethylene and other olefins, and your major end use is and health of the NGL industry is really tied to your primary petrochemical market. If we try to, tabulate and track every major driver for liquids, both on the supply side and the demand side, it would look something like this. And I'm not going to go over this slide in a whole lot of detail, but on the supply side, certainly the biggest drivers get for the production of liquids from gas processing is you've got associated gas production, that is gas that's associated with the oil production, and you got gas that's non-associated for oil production. There's a certain quality of NGLs in those gas streams. If the gas is rich enough, then it has to be processed in order to meet pipeline quality specs. That feeds into the NGL supply. Also, you got refining operations, and then everything else that can influence imports and so forth. Environmental regulations can have a big impact on refining operations and its ability to either produce liquids or even in some cases consume liquids on the demand side. On the demand side, there's a whole host of fundamental drivers, everything from weather, environmental regulations, how much gasoline we produce, the economic activity that may drive petrochemical production, things that determine ethylene economics and refining economics all play a role in this. And so you can see it's a pretty complex sort of thing that you've got to watch all the time. The problem is not all NGLs are influenced by all these factors. Some of them are influenced by some of these factors and so forth, and that's why you have to break up the NGL barrel to really understand which factors influence which NGL. If we move on to the next slide, the one thing I want to point out is where does the NGL value chain fit in the total energy value chain, and it's really between exploration, production, and end uses. And the real key thing, too, here is when you look at different companies that are in the midstream sector, you want to see how integrated they are along this value chain. And usually the integrated midstream players have the competitive advantage of extracting and handling NGLs on a variable cost basis versus the non-integrated players who pay full cost for getting their NGLs to market. One thing to note, too, is the basic drivers for NGL extraction, whether it be from gas that's being processed in a natural gas processing plant or crude oil, ethane is really the only discretionary component in most cases. That is, you have some discretion to leave the ethane in the natural gas stream or take it out. And basically, the heavier NGLs such as propane, normal butane, isobutane, and natural gasoline, they all have to be taken out of the natural gas stream to meet the BTU specifications by the pipelines or the dew point temperatures by the pipeline. In crude oil refining, it's just basically a byproduct. Because of the different processes in the refinery, they produce off gases. Those off gases contain NGLs, and then they make a decision whether they want to extract those NGLs or burn that off gas as a fuel. Usually they can't burn it as a fuel because there's other impurities in that off gas that create greenhouse gases and so forth, so they usually have to extract it, and they just sell it to whatever the market will bear. So it's basically a byproduct of refining operations, and to some extent you have to take out a lot of the NGLs out of the gas stream to meet the pipeline specs, with the exception of ethane. If we just look at a pattern of supply and demand, this one just layers on the different primary supply sources for liquids, and you can see that there's a very seasonal pattern for the supply of liquids. Usually the supplies peak during the summertime when refiners have to take out a lot of the NGLs from their gas liquids, and demand is actually denoted on the red dotted line. It actually peaks when supply is at a seasonal minimum, and so storage is used to balance supply and demand going forward. But as you can see here, the supply of NGLs have been, fairly constant over time. If we just look at the next chart, this shows basically the demand components, and you can see petrochemical is denoted by the blue shaded region, and the fuel component is on top of that. And it's that gives the fuel component demand is very highly seasonal. And again, you get a peak during the winter time for NGL demand, and it reaches a minimum level during the summer. Again, supply is counter-seasonal to demand, and this is where inventories come in and out of storage to balance supply and demand. So it's a highly variable type of situation from a standpoint of demand and the supply. It's not a steady state. It's highly seasonal in some cases. The other thing I want to just kind of key off this, each NGL has different markets with the exception of ethane. Ethane's primary market is in the production of ethylene, and so it has to compete with different feedstocks. Some of them are NGLs themselves. Some of them come directly from the refinery, like naphtha and gas oil. If ethane is not priced competitively with these other feedstocks, then what happens is it has to stay in the natural gas stream, or a significant part of it has to stay into the gas stream. And there's a relationship between ethane and crude oil, and it can vary all over the map, but right now ethane is selling at a very low relationship to crude oil. It's been trending down over time, and you'll see that most NGLs have been trending down relative to crude oil prices. Propane, its primary market is really, if it's not used in as a fuel, it has to be used in the petrochemical markets. As a feedstock, it has to compete with the same sort of feedstocks that ethane does, and so when it's not used in the space heating market, it's used primarily as a petrochemical feedstock, and that's really what sets its price for most of the year, and it has a certain relationship to crude. It's been trading within a wide range, as you can see here, and it has also been trending down relative to crude, but we think it's going to stabilize at some of these lower levels. And then as you get into the heavier NGLs like butanes and natural gasoline, their primary market is in gasoline production. And if they don't go into gasoline production, sometimes they're used as a petrochemical feedstock, and they have a much higher relationship to crude oil. So I don't want to spend a whole lot of time on this slide. We can touch upon it later if you guys have questions about the pricing of NGLs relative to crude oil. One thing about ethane demand, and I've touched upon this briefly, but it's very important to understand it has only one major end use, and that's a feedstock to produce ethylene. And the U.S. ethylene industry consumes ethane sourced from gas processing. About 95% of that comes from gas processing that they get their ethane from. Ethane is also sourced from crude oil refining. About 5% comes from there. We don't import ethane. We don't export ethane. It's just really too costly to do that. So there's a real closed system for ethane in the United States. And the consumption of ethane by the ethylene industry can be quite volatile. You have your ethylene business cycles that can be mainly driven by economic growth. The type of ethylene plant and their ability to switch feedstocks. There's different types of ethylene plants that we'll touch upon fairly soon. The relative value of gas to crude helps because gas sort of sets the price floor for ethane, and so if you have lower gas to crude ratios, that helps sets the competitive value of ethane versus other feedstocks. Obviously, you have the price of competing feedstocks that can influence whether ethane is used or not. Also, ethane, when you crack ethane, you make a lot of ethylene from ethane, where if you use other feedstocks to produce ethylene, they make a lot of co-products. But those co-products have value in themselves, so the higher the co-product value, it sort of detracts from using ethane. The lower the co-product value, it helps ethane. And then last year in 2009, a lot of these co-products are used in the making of durable goods. So last year when our durable goods were really depressed because of the recession, it helped ethane be the primary feedstock for the petrochemical industry. And then you have the competitive position of our ethylene industry versus foreign ethylene producers, and we had a very good competitive position against foreign producers because our gas to crude ratios were very low. Therefore, our ethane values were very competitive. And so one thing to note, though, is that even in the best of economic times, the U.S. ethylene industry can swing ethane consumption by 20 to 30% in a matter of weeks. It's just depending. They have that much flexibility within the industry to switch on and off a certain amount of ethane during the course of a year or so. One thing, as I mentioned, and this is just a quick, what we do is we chart gas's relative value to crude on a thermal basis. That is, that we take crude oil, the crude oil value, and there's 5.8 million BTUs in a barrel of crude oil, and we divide that into the dollar per barrel value for crude to get it on a BTU basis. And what you see here is the value of natural gas relative to the BTU value of crude oil. And right now we've been trading at a very, very low relationship to crude oil, between 30 and 40%. And you can look going back 20 years, and the average ratio has been somewhere around 70%. And this is what has given us such a good market for, say, something like ethane, because and made our petrochemical industry much more competitive than it has been in the past to petrochemical industries in Europe and the Far East, such as Japan and South Korea, is that we have such a low gas-to-crude ratio right at this moment. The other thing, too, is the fact that what's giving us the large NGL uplift is that we have low gas-to-crude ratios, and we've had fairly relatively high crude prices than we've had in the past. And so the BTU spread between natural gas and crude oil has been quite high. So low gas-to-crude ratios, high crude prices has created a very wide gas-to-crude ratio of around $10 a million BTUs. And so this is a huge amount, as you can see, going over time. That average value has been something just right at around $2 a million BTUs, and we've been trading somewhere between 8 to even high as $12 a million BTUs, and this is what's giving us our NGL uplift. And that is actually shown in the next chart. Because NGLs sell at a relative value against crude oil or a relationship to crude oil, and the basic price floor for NGLs is natural gas, that we get this really wide NGL uplift. And what we've done here is we've taken typical NGL barrel from a new processing plant, which extracts at least 50% of its NGL is ethane, and you can see the very wide margins that we have seen. And this is why a lot of producers want to go after the rich gas plays, because if they do, they get an uplift to the value of their natural gas by extracting the much higher valued liquids in that gas stream. And so we've had a very high NGL uplift over the last couple of years due to the very low gas to crude ratios. Now, if we just focus on ethane, one of the things we notice is what I've done is taken a ratio of ethane to crude, and that's shown on the left-hand side of the chart here. And what that is just taking a simple ratio on a dollar per barrel basis of ethane divided by crude price, and you can see it's been trending down. Basically what's happened is as more ethane is brought on the market, its value relative to crude goes down. And also the petrochemical industry has a quite bit of more flexibility than it's had in the past to swing off and on ethane. So if ethane gets too pricey, petrochemicals swing off and it brings that value down. But the combination of more ethane supplies and the flexibility of the ethylene industry has really sort of pushed ethane's prices down relative to crude. But even though it has, since we've had such low gas to crude ratios, you can see here on the next chart to the right that you have very high still ethane frac spreads or an uplift over gas values, and it's much higher than what we've seen over the average period. So we still have a very good ethane uplift, even though the value of ethane relative to crude has been going down. One of the things to just know, and this is sort of a little bit of a side note, when you see ethane extraction numbers that may come from the government, the EIA, it's really they tabulate those at the tailgate of a processing plant. And usually what happens is you have your processing plants, and then those mixed NGLs go into a long-haul pipeline where it then goes to a standalone or centralized fractionator. Those fractionators could be at Mount Belvieu, or they could be in Conway, or they could be some places in Louisiana, and that's where you get the separation of your individual liquids. There is no public information about the volume of individual NGLs exiting the fractionators. All that information resides at the tailgate of the plant. In some cases, the processing plant will have fractionation associated with it or partial fractionation. But in most cases, what you see is a processing plant, like it may be up in the Rockies, and it sends its liquids down very long NGL pipelines that may be owned by Enterprise Products or ONEOK or whoever, and then it goes to a centralized fractionator. This is, if we had to broadly draw on a map where the flow of NGLs, what you have is most of your NGLs or most of your processing industry is located in processing regions where the gas production is. So you have major processing regions like in the Rocky Mountain area or the San Juan Basin or the Permian Basin in eastern New Mexico or West Texas. South Texas is a major processing region. All along the Gulf Coast, especially the Louisiana Gulf Coast, which takes a lot of offshore gas, that's another processing region. And then you have your mid-continent region. Your Anadarko Basin is another big processing region. And also there's a big processing region in western Canada. The blue arrows represents where you take the raw mix NGLs from these processing regions and go to the big market centers like in Conway, or the biggest market center for liquids is in Mount Belvieu. There's another market center along the Mississippi River, and that's where you have your fractionation complexes, and those liquids get fractionated out. And then the purity products like propane go up lines. Enterprise is a big pipeline that takes propane up to the northeast. They also have a pipeline that takes propane to the southeast. Also, in the Conway market, there's purity NGL lines that are owned by ONEOK and Enterprise that distribute, say, like propane to the mid-continent and then even further out into eastern Canada. So that's basically give you a picture of the of the major flow patterns for NGLs and also who owns those big NGL corridors or pipelines to the marketplace. One of the things, too, is that when you look at, a lot of times we've referenced NGL frac spreads on the Gulf Coast by taking Mount Belvieu prices less Henry Hub prices for natural gas. But in actuality, you've got to subtract transportation and fractionation costs to come up with what the regional NGL netback value is at the plant. That is, you take your Mount Belvieu price for your individual NGL and you say, well, it takes so much to transport this NGL to Mount Belvieu. It takes so much, it costs so much to fractionate, and that's how you come up with your regional NGL netback value. And then you take the value of your natural gas at that point of where the processing plant is located, and then that gives you your shrinkage value or the cost of taking the NGLs out of the natural gas stream, and that's how you come up with your regional NGL frac spread. So realize that the NGL frac spreads that I've been quoting are based on a really Mount Belvieu basis, but actually to net it back into the particular region, you have to subtract out transportation and fractionation costs and also take into the value of natural gas at that particular site. Just to give you an example, here's a regional example. Let's say you have a plant in the Rocky Mountain, and what you would do is you take your value of ethane at Mount Belvieu, your gas value, and then you subtract off your T&F fees, and then you can come up with a regional frac spread for, let's say, in this particular case, for ethane. So if your frac spread for ethane on the Gulf Coast was around $4.75 a million BTUs, it's only $3.14 in the Rockies once you subtract out the cost. So that's an important thing to realize when you're looking at different economics for extracting NGLs in various regions. You have to take into account the transportation and fractionation cost of getting it to the marketplace. One thing to note, too, is that everything is not done simply on a frac spread. The frac spread is another way to say a lot of processors on keep whole, that is, their margins are dictated by the frac spread, but over time, a lot of processors have gotten have diversified off keep whole economics and gone more percent of proceeds as a basis for their processing fee. That is, they will get a percent of the liquid proceeds as part of their processing fee. In some cases, they both get a percent of percent of proceeds from the liquid sales, or also a percent of proceeds from the natural gas that's gathered and sold by the producer. And so we see a whole variety of different type of processing contracts where the producer is trying to the processor is trying to minimize his risk of processing and doing things. In some cases, there are processing fees built into these processing contracts. That is, if the value of liquids gets so low relative to the value of natural gas, then the processor can charge the producer a fee for basically conditioning his gas. So you have to be aware of different types of processing contracts that are out there in the marketplace. The other thing to realize when you look at different companies that operate in the along the NGL value chain is really the gathering and the processing of gas can really float on. There could be a lot of commodity price risk depending upon the type of gathering contracts that they have or the type of processing contracts that they have. That is, if they're on a percent of proceeds basis, then they're really floating with the commodity price. But as you get downstream from the processing plant and you go into NGL transportation, fractionation, or NGL storage, it's really on a fee-based type of a collection for revenue stream. And so the fee-based is fairly, there's very little commodity price risk involved in that, though indirectly there is if, for instance, it becomes uneconomical for a processor to extract ethane, then those people that own the transport, the fractionation, of storage are subject to volume risk. And there's certainly counterparty risk in that. So a lot of people think that downstream in the NGL transportation, fractionation, and storage part of the value chain that there's very little risk, but there is quite a bit of risk, a volume risk, especially if there's gas declines behind the processing plant, or like I said, it becomes uneconomical to extract the ethane, then you could see maybe 50% or more of your NGL volume go down, and so those people that own that part of the value chain have quite a bit of risk. Now, there are some midstream players, like I mentioned, like ONEOK and Enterprise, they have assets all along this value chain, so they're quite integrated versus a independent type of processor that only owns the plant. He doesn't have all the benefits of owning the downstream part. So when you evaluate different midstream companies, you always try to look at the degree of their integration. To give you an example, I'm not going to go over this chart, but what you try to look at is companies that are, how integrated they are along the value chain. This just gives you what we think are the top companies on each piece of the NGL value chain, and also we like Enterprise is very integrated across the value chain, and so is ONEOK. So those are the kind of things that you kind of look at when you're evaluating different companies, is trying to understand their integration along the value chain and what advantages they might have, say, over someone that just has one piece of the value chain. One of the things I want to go over quickly is NGLs from processing, and this because gas processing is a major component of the NGL supply picture. Like we talked about, it's over two-thirds, almost 75%, I should say. This is just a profile of where the natural gas processing plants are located. And if you notice, there's about 594 plants, and they only operate about 65% of capacity overall on average. That is, we process about almost 80% of the gas produced, but because gas is, over the years we built gas processing plants sized for a certain capacity, but in some cases that gas has declined behind that plant over a course of maybe 20 years or so. So the plant is maybe only half full or, 60 or 70% full. In fact, the industry operating rate is about 65%. So anyway, this is the sort of the profile of what the gas processing industry looks like from a geographic perspective. I also noted that we're going to have 3 LNG terminals on the Gulf Coast that can extract NGLs from from LNG that comes in. Right now, the Trunkline terminal at Lake Charles has the capability to extract NGLs. They just finished a NGL recovery unit there. Freeport LNG is going to have an NGL extraction unit completed by 2012, and Cheniere just announced an NGL recovery unit at their Sabine Pass LNG receiving terminal. So that's a new form of receiving NGLs via through rich or hot LNG. If we look at what's been going on, we've had major reserve additions in where the big shale basins have been. Again, I'm not going to go over a lot of details on this, but we're getting big reserve additions in the Texas inland areas like the Barnett Shale. We've got Wyoming. It's not such a shale play, but we're finding more reserves of natural gas there, and in Colorado, and certainly in Oklahoma, like the Woodford Shales. What's not shown here is probably the Marcellus in the Appalachian area. That it is shown here, but it's going to grow much more than what it's shown here. The government hasn't updated its data since 2008. And also South Texas is really going to be a growth area because of the Eagle Ford Shale. Because of all these big reserve additions, we've seen a lot of drilling that has occurred. And this chart here shows that we've had a big surge in gas production since 2006. We also overlaid on this is rig count that's read on the right-hand axis, and we saw rig count really surge as these new gas plays got developed. Right now we're producing somewhere between about 59 and 60 BCF a day of gas production. Even though drilling has come down quite dramatically, we're still seeing a fairly good gas production. We might see a little bit of a decline, but not much is what we think. It takes about 1,000 gas rigs in general to keep gas production from declining. We're right around 950 gas rigs, so we're basically holding our own on gas production, and that's expected to continue, maybe a slight decline over time, but nothing major. This gives you a map of the major shale plays, and the Marcellus play is a big, rich gas shale play, at least parts of the Marcellus play. The Eagle Ford shale play is a new play. About two-thirds of that play is oily or rich gas, and then you've got your other plays scattered across the mid-continent into the west coast. You can see the development of these shale plays by the amount of horizontal drilling that's been going on, and horizontal drilling is now constitutes 50% of our rig count, and we've actually seen an increase of horizontal drilling over time, where we've actually seen a decrease of total drilling, but it's just because horizontal drilling is just picking up the slack, and it's due to all these new shale plays. If we look at total NGL production over time, overlaid with natural gas production, you can see that really from the early 2000s to 2006, our NGL production was trending down. And then as all this new gas started to be developed, we added a lot more processing plants, about 5.9 BCF a day of new processing plants, basically expanded the processing industry by about 10%. And we saw that NGL production started to really pick up from 2006 to the present. But what's interesting is if we take the individual NGLs that were produced in that total amount of NGL production coming from gas processing, that red curve here on this one chart shows the amount of ethane that's been extracted, and it's really the amount of ethane that's been the growth component for NGLs. It hasn't been the propane or the normal butane or the butanes or the natural gasoline component. It's been the ethane. And there's two reasons for that. One is that we added a lot of new cryogenic type processing plants that have deep ethane extraction capability. The majority of the processing plants in the industry for the past 20 or 30 years have been cryogenic, but they've only been able to get maybe anywhere between 50 to 70% of the ethane out of the gas stream. Now these newer cryogenic plants are able to get as much as 90% of the ethane out of the gas stream. So that's one reason why we've seen ethane extraction pick up. The other reason why we're seeing the heavier components not increase in terms of total volume is that the gas is actually getting a little bit leaner. That is, there's less liquids in the gas stream, and so that there's still ethane contained in that gas, and we're doing a great job extracting it, but we basically are extracting all the propane, the butanes, and natural gasolines that we can. So really, when you look at NGL volume growth, the vast majority of it is due to ethane extraction. And if you do that as a percentage of the NGL barrel, you could see that ethane as a percentage of the barrel, which is shown on the right-hand side of this slide, you can see that it's up to about well over 40%. It's like at 42.5%, and it had been trending around somewhere about 38 or 39% of the barrel. So you can see ethane is constituting more of the NGL barrel than it ever has before. And that's why we really try to focus on ethane, because of all of its, it can be kept in the gas stream, or it could be, and also because of its, usage in the petrochemical industry, they can use it or not to a great extent. So you really want to focus on that part of the NGL barrel because it has the most economic sensitivity of all the NGLs. The other thing to realize, too, is that the regional change that we've seen in NGL extraction, and we also broke out the regional change in ethane, is we're extracting less NGLs from the Gulf Coast because of the declines we're seeing on the Gulf Coast in natural gas production, and most of the increases that we're seeing in NGL extraction are occurring in the inland regions like Texas inland. The Rockies are a big major contributor, and then the Mid-Continent is also. And over time, the Marcellus may be a big contributor of NGL. So we're seeing a regional shift in NGL extraction, and that's caused us to build more infrastructure to bring those liquids down to the market centers. And that's why you've seen a lot of activity by Enterprise and ONEOK in building new pipelines, new fractionators, and so forth, because they're trying to adjust to this regional shift in NGL extraction. So over the next 2 years, what we're seeing is even though we've built a lot of new plants, we see another 1.3 BCF of new processing capacity will be built, and it has the capability of putting another 100,000 barrels a day of NGLs onto the market, and of which 44,000 barrels a day will be ethane. Now, this is if they were operating at 100%. In our forecast, we put some variables to this to say these plants aren't going to operate at 100%. They're going to swedge up over time. But anyway, that's what, if they were operating up 100%, that's what they're capable of doing. The Eagle Ford Shale in South Texas has the potential to be a major NGL producer from the rich gas plays in those shales. That gas is extremely rich. It has about 9 gallons per 1,000 cubic feet of gas. Some of those liquids have to be taken out right at the field before they even reach the processing plant. But we think the amount of gas that could be produced there is about 3 to 3.5 billion cubic feet a day. About two-thirds of that gas will be rich, we think. And over the next 12 to 18 months, more infrastructure is going to be needed to handle the first initial surge of this gas stream, which we are predicting to be about 1.5 BCF a day over the next 12 to 18 months. The estimated liquids that can come from the Eagle Ford Shale, we are assuming about 4.5 to 5 gallons per 1,000 cubic feet will be in this gas stream when it reaches the plants. And we could see by 2015, we could see 150,000 barrels a day of more NGLs. Of that amount, about 75,000 barrels a day will be ethane. We're also thinking that LNG terminals could be a major source of NGLs over time, but basically the rateability is very, very questionable from these NGL terminals. And so we've got about 1 BCF a day of NGL recovery from these terminals, and that is at the trunk line terminal. The uplift is about $1.50 today, so there's a lot of incentive to try to take these liquids. A lot of these liquids are primarily about two-thirds is ethane that are contained in this LNG stream. Like I said, by 2012, Freeport LNG is expected to have about 800. They're going to start out with 2 trains of 400 million a day each of processing capability, and then later on, Cheniere is going to add about a B. But like I said, this is a very rateability is a very big question mark here. We don't know how often they're going to bring LNG in to extract, so there's a big question mark in terms of if we're going to see the full potential from these terminals as they are designed to do. And then if we look at this from a total amount of liquids, there's one chart just devoted to total liquid extraction. There's one chart devoted just to breaking out the ethane portion. And as we can see, there's the plants that existed before 2007 is noted in sort of the blue shaded part of the bar chart. And those plants will continue to see decline in liquid extraction from their legacy gas, but over time, as the new plants that have been recently built over the last 2 or 3 years, and those that will be built that have been announced Those are shaded in green, and then you add on what could come on from the Eagle Ford Shale and what possibly could come on from LNG, and we could see that in the case of ethane extraction, it should really start to ramp up and hit well over 900,000 barrels a day, about over 2 million barrels a day is going to come from total NGLs. But we have built in decline rates into this, but we're going to get a lot more liquids, principally ethane, onto the market in the next 2 to 5 years, basically. As I said, another wild card is how much we're going to get from the Marcellus Shale. There's about 1.2 BCF a day in new processing capacity that's been announced that's going to be built. Right now we're estimating about 57,000 barrels a day will be propane plus that will be extracted from these plants. At this time, no ethane will be recovered. However, initially they could recover 42,000 barrels a day of ethane if they had a market. But right now they're going to be blending that ethane into the gas stream. Another BCF a day of new rich gas production is probable in the Marcellus play, and it represents about 82,000 barrels a day of liquids, of which about 35,000 barrels a day could be ethane. And the major challenge is at some point the gas producer will no longer be able to keep the ethane in the gas stream, as the BTU content of the gas will exceed pipeline specs in the Northeast, so they must find a way to extract that ethane. And we think as much as 80,000 barrels a day of ethane could eventually come from the Marcellus play. Basically, there's been some projects that have been announced, and we're thinking that those projects, one of them has been announced to go into Sarnia. One of them, several have been announced to go in the Midwest. We think the best option for these liquids are to come to the Gulf Coast. That's where the biggest market is for these, specifically ethane. And we think going into Sarnia and the Mid-Continent is a real mistake by some of the folks that had proposed these projects. We think they'll get very low netbacks for the producers, and those markets are not large enough to absorb the amount of ethane that could come out of the Marcellus play. Let me just quickly go over the NGL demand by the petrochemical industry. The next slide, which shows a title, Distribution of Ethylene Capacity in Plants, this is the distribution of the ethylene plants across North America. Nearly 80% of the U.S. ethylene capacity is located on the Gulf Coast between Corpus Christi, Texas, and New Orleans, Louisiana. You do have the next highest concentration of ethylene plants are in Alberta, and then you have a small amount in Sarnia, small amount in the Midwest, and one plant in Kentucky. So that gives you a sort of a broad overview of what the footprint of the North American ethylene industry looks like. This is just the listing of all the plants in North America. Not going to go over that, but in Canada, they mostly crack ethane up there, but in the U.S., they crack a variety of feedstocks, just not ethane, but a whole range of feedstocks, and there's different plants that can crack different types of feedstocks. If we go on to the composition of the U.S. ethylene capacity, this is what it looks like. And what's happened is over time, the U.S. ethylene industry started getting away from cracking the lighter feedstocks in the mid-2000s because they thought gas was going to be very, very tight. And what happened is last year when they found out gas was, and in 2009 when gas ratios came, very low relative to crude, they started to shift more of their cracking towards the lighter feedstocks, and they started to shift a lot of their flexi crackers over to crack more ethane. And so the ethylene industry has not been a really good judge of the natural gas picture over the last 20 or 30 years. They've usually leaned one way when they should have leaned the other. They've guessed the gas picture wrong in this country several times over the last 20 or 30 years. I'm going to skip this next slide, but basically what it says is if you crack ethane or use ethane in an ethylene plant, 80% of it goes into ethylene. The heavier the feedstocks, the less ethylene you get, but the more co-products you get. the profile of the U.S. ethylene industry is like this. But anyway, we're cracking a whole lot more ethane. So the thing is here is that we're cracking ethane at the detriment of cracking the heavier feedstocks. And I'm going to leave it at that, and then we can go to client questions.
Thank you, Peter. We'll now move on to the question and answer session. The first question I have is, how has industry operating rate been historically?
For which industry? Did you say ethylene industry or gas processing?
You know what? Let's go for both because the client did not specify.
For the gas processing industry, it's been around 60 or 70% over the long run. Some of the newer plants that are being built are much higher, but yeah, but for the gas processing industry, average has been somewhere around 60 to 70%. For the ethylene industry, it's been somewhere in the neighborhood of about 90% over the long run.
Thanks, Peter. Our next question, what would be a frac spread level to support reinvestment? This came earlier on in the presentation.
Probably somewhere around 5 to 10 cents a gallon overall for NGLs. I would think for ethane extraction, it's probably low between, I think you can make it for 5 cents a gallon. But overall, you probably need a good 10 cents or more on the total NGL stream. But the problem is you usually have to extract the NGLs from the gas stream.
Thank you, Peter.
So I'd say 5 cents for ethane would be the answer.
Thank you, Peter. This will be our last question. How vulnerable do you think ethane frac spreads are?
They could be quite vulnerable. We could see times when we get an overbalance of ethane on the market, and that could be due to a drop in petrochemical production for some reason, like several plants go down unscheduled. So ethane crack spreads or frac spreads can come down quite dramatically and fast. Sometimes they do, and then they bounce right back up. But we're thinking over time the high frac spreads that we're seeing probably won't last, but we'll get more to the normalized spreads that we've seen historically, which has been much lower than what we've seen today.
Thank you, Peter. I have one last client question here. What's the outlook for the NGL prices as there is a lot of incremental liquids as natural gas producers chase rich hydrocarbon gas plays?
What's the outlook for prices?
Yes.
I think they're going to continue to stay at a low value relative to crude. I think you have to look at each NGL, but I would say the values that we see today are going to be more likely to continue over time. And so relative to crude, you're probably looking at a total NGL price of somewhere around 50 to 55% of crude value, somewhere in that neighborhood.
Thank you, Peter, for your time, and thanks to all the participants who joined us. That will conclude our webcast for today. We also have some upcoming events which you may be interested in. A seminar discussing the potential price bubble in the global steel industry with James May on Tuesday, May 25th in Boston and Wednesday, May 26th in Chicago. A webcast on China's dependence on imported wood fiber with Robert Flynn, Director at International Timber at Resource Information Systems, RISI, on Wednesday, May 26th. And a roundtable on the North American petrochemical industry with Venki Chandrashkar, former Director of Business Development at LyondellBasell, on May 26th at 12:30 p.m. Eastern in New York. If you would like to follow up with Peter or have any other inquiries, please contact your Gerson Lerman Group Research Manager. Thank you.
Thank you.